In 2022, market volatility has prompted many investors to move away from growth-oriented picks and into stocks that offer more stability and reliable returns. Dividend stocks are always at the top of the list when it comes to the lower-risk strategy, as they have to have substantive profits to pay shareholders, and they offer a decent annual return via those distributions as a hedge against declines. Right now, these 9 stocks make up the highest-yielding dividend payments in the S&P 500 and could represent some of the best income-oriented opportunities right now. In today's video, we will be showing you top dividend stocks that brought large dividends. Without further ado, let's begin. AT&T Incorporated, T. AT&T is valued at about $150 billion right now, and that's after its major spinoff of its major stake in Warner Bros. Discovery Inc. (WBD) to focus on core telecom operations. The company has strong underlying financials and an entrenched U.S. business that isn't easily distributed thanks to the highly regulated nature of telecommunication services. There admittedly isn't much growth ahead of the saturated and mature U.S. telecom market, but income investors who are more interested in long-term dividend potential will be satisfied with the stable blue-chip stock. It most recently cut its quarter dividends down from 52 cents to 27.75 cents and will be continuing at this rate. Williams Coss Incorporated, WMB. The roughly $36 billion Williams is not a particularly iconic energy company, in part because it's a different flavor of stocks with a focus on midstream operations. This segment includes transportation of fossil fuels by pipelines as well as operation of massive storage and processing facilities. As long as end users are taking delivery of these energy sources, Williams can charge a decent fee along the way to power its $1.70 in annual dividend distribution. Devon Energy Corp. DVN. Another high-yield energy stock in the S&P 500 at present is the $35 billion Devon, an Oklahoma-based independent oil and gas exploration firm. Operating exclusively in the U.S., DVN owns and operates more than 5,100 wells nationwide. The company's dividends have surged from just 9 cents per share quarterly at the end of 2019 to a stunning $1.27 paid in its most recent quarterly distribution. When you add up the last year's payouts, you get a yield that is roughly 4 times that of the typical S&P component. However, when you throw in there the roughly 80% gains for DNV stocks in the last 12 months, this stock looks even more attractive. Oneok Incorporated, OKE. Another midstream energy company and top S&P 500 dividend stock, OKE engages in processing, storage, and transportation of natural gas in the United States. Some see natural gas as an important bridge fossil fuel because it burns cleaner than coal and crude oil, and right now is reasonably affordable when compared to the alternatives, with the exception of wind and solar. The company operates some 17,500 miles of natural gas gathering pipelines, 1,500 miles of interstate pipelines, and a few dozen storage terminals and processing facilities. The highly regulated nature of this business and the capital hurdle to competition means that it's not likely OKE will see any major disruptions to its bottom line or its dividend anytime soon. Simon Property Group Inc., SPG. Simon is a real estate investment trust, or REIT, meaning it's a class of publicly traded stock that gets special tax treatment for its property-heavy business and in exchange must deliver 90% of its taxable income to shareholders. That provides a mandate for big dividends. Specifically, SPG owns premier mall real estate with shopping, dining, entertainment, and mixed-use destinations. The firm was hit pretty hard by the pandemic, and after recovering in 2021, it has been suffering once more thanks to fears of a consumer spending pullback. However, this nearly $40 billion commercial real estate giant has the staying power to both weather the short-term challenges and keep paying dividends for quite some time. Kinder Morgan Inc., KMI. Another of several energy-related stocks that make this list of the highest-paying S&P 500 components, KMI is an energy infrastructure company that mainly operates pipelines, processing facilities, and storage terminals for various energy commodities, including gasoline, diesel fuel, chemicals, ethanol, and various petroleum products. With crude oil prices above $100 a barrel, there's a tailwind in the sector that has helped lift many other energy stocks this year. But on top of the modest returns for Kinder Morgan, while the rest of Wall Street is deeply in the red, you get a generous quarterly dividend of almost 28 cents. Vornado Realty Trust, VNO. Real estate operator Vornado barely makes it into the S&P 500 index with a valuation of just $6 billion or so at present. But while it's not one of the best-known S&P 500 dividend stocks, it's worth a look because of its stable business and long-term income potential. VNO properties are concentrated in the nation's key metropolitan markets, including prime properties in New York City, Chicago, and San Francisco. While the pandemic did spur growth in the work-from-home trade, VNO attractive locations and best-in-class properties make it less of a risk to disruption than other players in the years ahead. Altria Group, Inc. MO. Altria is the U.S. arm of what used to be Philip Morris before its 2008 spinout. It sells top cigarette brand Marlboro, as well as cigars under the Black and Mild nameplate, and smokeless tobacco products including Copenhagen and Skoal. Big Tobacco doesn't exactly conjure up the idea of growth given the obvious health risks of these products, but MO has proven to be a slow and steady stock that pays constant dividends from its well-run and resilient operation. Right now, the stock is paying $3.60 annual dividends, which remains comfortably under its projected $5.11 in earning per share for fiscal 2023. That means the income potential of this stock is still sustainable and could perhaps support modest increase over the coming years. Lumen Technologies Inc. LUM. Only valued at about $12 billion, Lumen is a smaller telecom stock than the more recognizable names in the S&P 500 index. Still, it's one of the top dividend stocks in the index from a yield perspective, with its 25-cent quarterly dividend per shares delivering an annual yield that is north of 8% right now. Lumen was previously known as CenturyLink and currently provides data access to about 5 million broadband internet subscribers and landline phone connections. While smaller than top-tier telecom players, LUMN could be worth a look if you're willing to get smaller in pursuit of larger yield. Chevron CPC. Chevron CVX $120.70 is yet another member of the Dow, delivering a disproportionate share of the stock market's wealth creation since 1926. It's also been a reliable deliverer of dividend income, with 30 consecutive years of annual growth in its cash payouts to shareholders. Chevron's track record instills confidence that the dividend will continue to rise well into the future. Chevron's origin as a company date back to the 19th century and run through J.D. Rockefeller's legendary oil empire. Chevron operated for decades as Standard Oil of California, though the Chevron brand was used on products as far back as the 1930s. The corporate name didn't officially change to Chevron Corp until 2005. So guys, let me know your thoughts down in the comments section below. For more interesting content, give this video a thumbs up and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.